Hello traders, this is Ad Zeros and today we're going to discuss what are the factors you should consider before you decide to increase your position size. So let's take in a scenario that I am getting too comfortable with my existing size, I'm being consistently following my rules, I'm getting profitable. Now I've decided I wanted to increase my position size. So question, should I increase my position size for all the new transactions or trade I will take? The answer is no. You should not increase your size for all the new trades you take. Instead, you need to carefully plan that how you want to increase your position size. So let's discuss the factor number one. Factor number one, you should consider only you're allowed to increase your position size on your A setup. If and that how you would know that this is your A setup based on your past trades, you can see where you're profitable, where you're not profitable. Based on that, you will identify your A setups and you're only allowed to increase your position size on your A setup. Now, factor number two, does all stocks are equal? For instance, you know your setup is for instance, your setup is the opening range break up, and now the question is that whether you are any stock which have an opening range, would you increase your position size? Again, the answer is no. You cannot do that because there are different kind of stocks. Stocks have a different share float. Some are low share float, which is the less than 50 million, the small caps, the medium caps, the large caps, and all have a different behaviors and can produce the different price actions because people behind them have a different mindset. The low cap are easier to control. The small forces of the market can easily manipulate the price action of those stocks. So would you prefer to go a bigger on the small share float size, which have only $1 million share size? I will leave this question to you, but my answer is no. You should not increase your position size on the small or float where your risk becomes too high and you're not comfortable taking those fluctuations. Factor number three, the volume need to be very carefully see if this is a low volume stock, would you like to go bigger? Again, the answer is no. You should not take or increase your position size where the less liquidity, because if it's less liquidity, the stock can drop or can go up in the seconds, and it can due to spikes you can blow up your account, so you should not do that. Factor number four, the relative volume of the stock. What is relative volume of the trade? That, for instance, if in a normal day the stock have only 200,000 shares, but today the shares have traded more than 800,000 just in the pre-market, so relative volume is very high, is maybe more than 4. So what would you do that? If the stock's relative volume is too high, is mean that there is no increased volatility in the stock. And if you are trading that stock with the increased position size and price fluctuate from up and down, you will not able to tolerate that. You might blow up your account if your account does not have that cushion. And you can see this example in the BBY stock, a game stock 2 weeks ago, where the relative volume is getting too high, and because of the increased volume, it increased volatility and price jumping too quickly and dropping too quickly. So you do not want to be in the situations where volatility is too high and you're going with the bigger size and you can blow up your account. So I hope you like this video. There's something valuable I can offer. Please do not forget to subscribe to my channel and give me thumbs up if you wanted to see more of these kind of videos. Thank you.